Internal Revenue Service IRS tax news. New things taxpayers should consider as they get ready to file taxes in 2021. COVID Tax Tip 2020-172, December 16th, 2020. When people get ready, and there's a link to get ready here, to file their federal tax return, there are new things to consider when it comes to which credits to claim and what deductions to take. These things can affect the size of any refund the taxpayer may receive. Here are some new key things people should consider when filing their 2020 tax return. Recovery rebate credit. Taxpayers may be able to claim the recovery rebate credit, there's a link to that here, if they meet the eligibility requirements in 2020 and one of the following applies to them. So the recovery rebate credit is going to be tied to the economic impact payment. So you'll recall that the economic impact payment went out in 2020. So that's going to be a response to the coronavirus. They're just sending out checks. And basically they tied that to the prior year tax return. So in other words, if you had filed 2019 or 2018 tax return, they got the basic information there so they can send out the check. And the check was based on pretty basic information, meaning everybody with a social security number basically got a check for the most part, unless they were claimed as a dependent. But there were a couple things that were a little bit glitchy, and they planned on fixing all those things in when you file the 2020 tax return in 2021. So basically what the recovery rebate credit is any kind of fixes, any kind of rectifications to any problems that had happened with the economic impact payments that went out in 2021. Common problems that could have happened: one, you just didn't receive the check for whatever reason. And if that's the case, then you may be able to get the recovery rebate credit. Now, if you filed 2018 and 2017, or even if you didn't file and you got some kind of benefit program like Social Security or something like that, the IRS should have sent out the amount. And if that's the case, then you may not get the recovery rebate credit. The other problem that can happen sometimes, however, was there was the dependents. The dependents they may not have known about. So maybe you had a tax return for 2018 and you didn't have a dependent, and then you had a dependent in 2000, or a qualifying child in 2019 or 2020, which could qualify you for another $500 in the economic impact payment. And if you didn't get that added $500 for like a qualifying child, then you could possibly get it with the recovery rebate credit as you file the tax return in 2021. People that didn't file their taxes and the IRS just kind of guessed how much to give them based on other kind of resources like Social Security, if they had a qualifying child, the IRS wouldn't have known about that, and they may not have given the added $500 per qualifying child. The other thing that could have happened is for college students. College students kind of fell in the gap there, because if you're a qualifying child, then you get the $500 possibly added economic impact payment that goes to the parent. But if you're like a student possibly, then you may still be claimed as a dependent, but you're over the age, the 17, to get any benefit to the parent. And the dependent's not going to get anything because they're a dependent. But it's possible that we had students that were dependents in whatever year the IRS was issuing the economic impact payment, but now they're independent. And so possibly in that case, there would have been another scenario where no economic impact payment went out, and possibly they would be in a situation that they should get one and then could use the recovery rebate credit. So bottom line is you should get documentation related to the economic impact payment. You want to make sure you're holding on to that, provide it to the tax preparer so they have it, so that they can then make any adjustments to the recovery rebate credit if necessary. Normally, for most people, there shouldn't be any adjustment if the economic impact payment went out correctly, which I think it did, for most people. But if it didn't, then the adjustment will be there. Okay. So here we have it again. Taxpayers may be able to claim the recovery rebate credit if they meet the eligibility requirements in 2020 and one of the following applies to them. They didn't receive an economic impact payment in 2020. They are single and their payment was less than $1,200. So they might have, they might have gave you something less than 1,200, possibly because of a phase out that shouldn't have applied or something like that. They are married, filing jointly for 2018 and 2019. Their payment was less than 2,800 or 2,400. So if you're married, obviously, then you should get twice the amount, 2,400. But again, the IRS may not have known. They may have been judging it based on a prior return before someone was married or on Social Security kind of information. So if you only got 1,200 and between the two of you, you should have got 2,400, then you may be able to fix that with the recovery rebate credit. They didn't receive a 500 for each qualifying child. Okay, so refund interest payment. People who received a federal tax refund in 2020 may have been paid interest. The IRS sent interest payments to individual taxpayers who timely filed their 2019 federal income tax returns and received refunds. Now, what happened here is basically because of some changes in the dates on when taxes are due, then many people paid the IRS early in that case because they paid under the normal schedule. And so the IRS said, okay, you paid us early, so we're going to give you interest. We're going to give you interest due to the fact that you kind of gave us money before you owed it, so you kind of like loaned us money. You gave us money before we owned it, and the IRS actually pays interest in that case. Just like when you don't pay your taxes, the IRS then charges you interest, and they charge you interest, and you have to pay them interest. So when you prepay, then sometimes the IRS will actually pay you interest. Now, it was kind of comical when the IRS actually did this, because most of the time the interest is very small dollar amounts. So the IRS actually sent checks out for like, $3 to $50 or something like that. And people were, when I talked about it, people were conflating the interest payments with economic impact payments and feeling like this is ridiculous. You gave me $10, like why, but the fact is they were giving interest, right? They're doing that's just what the IRS does. That's going to be the way the law is, right? If you don't pay, they charge you interest. If you prepay, they actually pay you interest. So it should be a fairly small amount of interest that you may have gotten, but you might get a 1099 then from the IRS saying that they paid you interest. And just like a bank, if the bank paid you interest, and you're going to have to report the interest income on the tax return. So it's probably not a big dollar amount. It's probably like immaterial for most people. But it can be a little bit confusing to say, hey, why am I paying, why do I have to include in income this thing from the IRS? That's kind of weird. And it's because of this interest, because of this prepayment. So they paid you that prepayment of interest, so you got to include the 1099 on the interest. But again, for most people, it's probably pretty insignificant in terms of, dollar amount for most people. So in any case, most interest payments were received separately from tax refunds. Interest payments are taxable and must be reported on 2020 federal income tax returns. In the January 2021, the IRS will send a Form 1099 INT interest income to anyone who received interest of at least $10. So you're going to get this 1099 from the IRS, and I think that's what they're warning people about, because you're going to be like, why am I getting a 1099 interest from the IRS? I pay them, and that's because they refunded the interest, and so you got a little bit of money of interest possibly if you get that 1099. Or you could have got a lot of money, but it's probably a little bit of money for most people. So in any case, new charitable deduction allowance. New this year, taxpayers who didn't itemize deductions can take a charitable deduction of up to $300 for cash contributions made in 2020 to qualified organizations. So notice the charitable deduction traditionally is on the Schedule A. It's still there on the Schedule A as itemized deductions. But you can also take up to $300 if you have a certain type of deduction like cash contributions to a charitable organization as basically an above-the-line deduction. It's actually not on Schedule 1, Part 2, but on the first page of the 1040 as a charitable deduction, which is nice because if you do not itemize, then when you give to charity, you don't get any tax benefits typically, and less people are itemizing due to the changes in the tax code a few years ago, which simplified the tax code, which gave everybody a bigger standard deduction, which is kind of nice. It kind of simplified the code, but it also means that less people are going to get any advantage from itemizing or the charitable contributions. And so the IRS, they added, or the law added the $300 up top. So you could still have charitable contributions past $300 that would benefit you if you're itemizing, meaning your itemizing deductions are greater than your standard deduction, then you can have more charitable deductions that would benefit you and deduct them in the way that you have seen in the past or in a similar way. But if you don't itemize and you just take the standard deduction like many people do, you can give up to $300 and actually get a tax benefit for it. So, and that could be something, of course, people could do at the end of the year here if they want to give charity at the end of the year and just deduct the, the $300. For more information, people should review publication 526, charitable contributions. There's a link to that here. Other refund-related reminders. Taxpayers shouldn't rely on receiving a refund by a certain date, especially when making major purchases or paying bills. Some tax returns may require additional review and processing may take longer. So the IRS will typically tell you the average time period it takes for a refund to be gotten. But you don't really want to rely on that. You don't want to basically, spend a lot of money and hope, even though I know that's hard to do these days sometimes, but notice when you talk about the average for the IRS, like the average refund period, that means there could be outliers to the average. So when you talk about an average, there could be some people that got their refund really fast, and some people, it could have taken a really long time to get their refund, and resulting in an average, which is kind of somewhere in the middle. So anytime there's a problem with the tax return, then it's probably going to take longer to receive the refund, and so you don't want to be like dependent on it if at all possible. So refunds for taxpayers claiming the earned income credit or additional child tax credit, there's a link to those here, can't be issued before mid-February. This applies to the entire refund, not just the portion associated to this credit. So notice the earned income credit and the child tax credit are the two refundable type credits. And these credits are actually a little bit difficult. They're some of the most common credits for lower income individuals to mid-income individuals, but the fact that they have that refundable component to them, and the earned income credit has phase outs with regards to income levels and whatnot, possibly might be some of the reason that it could take a little bit longer for the IRS to process those. They're also probably the most likely targets for fraud and whatnot that people might be targeting for. So it might take them a little bit longer to process the returns for those items. So the fastest and most secure way to receive the refund is to combine direct deposit with electronic filing, including the IRS Free File program. Taxpayers can track the status of their refund using the Where's My Refund. So they suggest, using software possibly through the IRS, or proprietary software or a tax professional software to e-file the tax return rather than paper filing the tax return. That'll make the refund faster. And then if you can connect to the bank account so that they can provide you the refund directly, that would be faster as well. Now, of course, if you're paying them, if you owe them money, then you might want to write a check or something. But no, you can electronically pay them or receive it. But if you want the refund and you're looking for the refund faster, then you want to electronically file in some way, and then you want to you could set up the banking information so they can give you the money as quick as possible rather than mailing the check. So more information can be found in publication 5348, Get Ready to File, and publication 5349, Year-Round Tax Planning is for Everyone. There's a link to those items here. There'll be a link to this in the description.